Hello and welcome to Luxembourg. We're here for Intertrust Group's Private Market Insights event. I'm Tony Griffiths with Global Fund Media, and I'm joined by Venkat Srinivasan, Intertrust Group's Managing Director. So in terms of one-stop shops, what does one-stop shop mean to you? What's your version?
So when I think of one-stop shop, several things come to mind, right? First and foremost, I would say is the listing of services that you offer. So be it an AFM, depository, central admin, directorship, domiciliation, regulatory reporting. There are a bunch of services which one service provider can offer a single client, right? The second aspect to it, I would say, is geography or location. Managers will want to make investment in multiple countries. They go buy a hotel in France, buy something else in Copenhagen, or go to Norway. You need local presence in various markets to be able to provide, if not funds, at least SPV services, help them with local registrations, substance-related activities. All of that needs to be done. So global presence, I would say, is key. Managers are looking with service providers who can manage this globally for them and not have to go to multiple people. And lastly, I will say asset class. Because when you look at asset classes, liquid, illiquid, even within illiquid, you have private equity, private debt, real estate, infrastructure, venture capital. There's a whole array of asset classes. So, a service provider needs to have expertise across all of these asset classes. So if you put all of them together, right, it comes together to say a one-stop shop. Now, technically, you can't give everything. I mean, there is audit, there's valuation. But if you look at this forms a very compelling mix, I will say.
The one-stop shop model that you've described, which type of private market manager is it best suited to?
So I will say this is it can work for any kind of manager, but a multi-asset manager, global managers are the ones which can derive maximum benefit. Mainly because one, I think it is cost effective. You're not dealing with multiple managers, multiple vendors. So and looking at one vendor, there is synergy in operations. You could derive a better price benefit. It makes your investors are not dealing with multiple service providers, so they're not doing KYC multiple times. You're working with one provider, so it does mean a lot of cost on the synergies. And if you can get everything right with that one manager, I think it makes your operating model also very compulsive. You're not having to look for a new provider for every time you launch a new fund, you go to a new geography. You have someone who can cover everything for you. It makes it much more easier.
And demand for this type of service has obviously been quite strong recently. Could you give us a bit of a flavour of the forces that are driving that demand?
I will say that the new fund launches has been very aggressive. The markets, obviously, post-COVID, we all know there's a boom happening in private markets. There were a lot of distressed strategies. We did extraordinarily well during that time. Real estate is now back in action. Private equity is in demand. So people are launching a lot of funds. I can see growth markets definitely in Europe, Luxembourg, and Ireland, and in the Americas. There is exponential growth. We have seen several of our clients come and launch the next round of funds. So demand is there, and there are people coming to invest.
Fantastic. Venkat, thank you for your insight.
Thank you. Thank you, Tony.